And of course, investors are monitoring the situation in the Middle East after U.S. President Donald Trump said yesterday that the U.S. and Israel are making significant progress in the war on Iran, and the conflict could be over very soon. Now, all this comes as U.S. Secretary of War Pete Hegseth warns that today will be the most intense day of American strikes on Iran. Joining us now is Kelsey Keane, Director of Equity Capital Markets at the National Bank of Canada. Kelsey, thanks as always for joining us.
Thank you for having me.
Just another dull day in paradise. How are you even making sense and figuring out where to go, when to go, and how to go with everything that's unfolding over the last couple of weeks?
Well, you said it. It's definitely been a struggle. So when I think back just 3 days ago, how much has happened since then? I mean, on Friday, we saw the VIX, the volatility index, spike 6 points to almost 30 points, a clear sign that there's stress in the market. Then we saw oil shoot up to over 120 or around 120 over the weekend. And then yesterday brought relief from Trump's comments saying that the war in the Middle East would be short-lived.
And now I'm just looking at oil's down to 84.
And now oil's down to 84.
Well, I looked about 15, 20 minutes ago and it was down to 88. So
exactly. Yeah. So, you know, what I see when I think about these last two things that we talked about, so oil coming down lower, you know, it seems to me that the market thinks that this conflict will be short-lived. Obviously, that's in a little bit of contradiction to some of the headlines we saw this morning. But again, markets are in the green, so investors seem to be looking through this conflict.
But are we through it now? And I looked at the VIX, I think yesterday was 25, so it's come down as well.
It's come down as well.
Does that mean it's is that a good sign that it's trending down, or is there really, can we even trust the VIX anymore?
I mean, in general, yes. It's a good sign when the VIX is trending down. It's hard to say because we're seeing, you know, shocks up 6 points, down 6 points in the matter of days or hours. So one thing that I can say that seems to be certain for the next little while is we will see volatility.
Yeah. I think that is probably a very safe bet. I mean, how important, though, is it that we're seeing this drop in oil? I mean, we started hearing talks about a global recession with this.
Yeah. So I think the immediate concerns when we saw the rise in oil prices was stagflation. So we saw oil prices rising rapidly, and then we also had a jobs report out of the U.S. on Friday, which showed weaker than expected income numbers. So what that means is, you know, with energy prices higher, that leads to higher inflation with the backdrop of potentially a weakening economy. So all that really stoked a lot of fears in investors.
Is there a danger that investors might be trying to wish away any potential downside right now? If we keep buying, everything's going to be okay.
So one thing I would say that's been a pattern over the last couple years is we've had these big news events or conflicts, whether it be tariffs. I mean, just think a little while ago, the U.S. was in Venezuela. All of these shocks have been short-lived. So it seems that investors have gotten in a pattern of getting over these conflicts or issues quickly. So I feel like we're starting to see that pattern repeat itself a little bit.
And is that new, that concept, or have investors always been like that when it comes to moments in time, history, you know, historical moments?
I think this is relatively new. I think just given the amount of volatility stoking events that have come into markets over the last few years, I think we're seeing more of this pattern develop.
So what do you do with that? Let's talk about Canadian markets. Where are you looking? What do you do with it? How do you balance all this?
Yeah,
we've seen rotation. We're not seeing rotation.
Yeah, exactly. It's been really hard to pick a thematic. I mean, for most of the year so far, we saw energy stocks and material stocks do quite well on the back of stronger commodity prices. Obviously, we've seen energy trade off a bit today. Materials traded off a bit on Friday, but now the price of gold and commodities are doing better. So the constant rotation seems to be a theme here, I would say. We also saw a brief trade into more stable income names like utilities. That seemed also a bit short-lived. And I mean, you know, with investors looking through the conflict in Iran, we are seeing a little bit of resurgence in tech names. One sector that I would say that seems to be persistently doing well is defensive names. So that's both in Canada and the U.S. Investors seem to like the long, stable contracts. And also, there is a thematic around more government spending in those sectors. And I mean, is war good for business too for those companies as well? Exactly. I think then the thematic of more government spending continues to persist.
Okay. I just completely lost where I was going with technology. Gold, that's what I wanted to ask you about. Are you surprised that there hasn't been as much of a reaction to gold? We haven't seen gold spike. In fact, I think it's probably dropped since the start of this. Or it's right around where we went into
so we saw it come down Friday a bit and then also Monday. And we saw investors going more into the U.S. dollar. So there seemed to be more safety in the U.S. dollar. So it's more liquid of an asset. I think we're seeing a little bit of a influx or increase today. So that, again, to me, shows that there's a little bit of a look through on what's happening right now.
And with everything that's unfolded, do you see investors starting to take a look maybe more at more stable places for their money and trying to get oil, Canada, i.e., or is it still a bit of a pipe dream that people will start looking our way?
So sorry, you mean investors coming
investors coming to
Canadian.
Canada and the energy companies up here and developing further what we have here, the resources?
I mean, I think that there's just been a general thematic around that even since earlier this year with Venezuela. I mean, there was a lot of attention on heavy crude oil on the back of that and what Canadian oil producers, how they can react in response to more supply coming online. I would say that energy stocks haven't quite seen the uplift in the spike in oil prices that we saw over the weekend. So I think we'll just have to wait and see how everything plays out.
Now, and we have seen the dollar, though, kind of go along for the ride with the U.S. dollar. Is that good or bad, do you think?
Well, in an export-driven nation, I think it's important to see that our dollar shows well next to the U.S. dollar, so we can get our oil exports out to other countries.
All right. Just fun times.
Yeah.
We're going to leave it there. And next time you're back, I'm sure we'll have some more to talk about this.
Absolutely.
Because it's not going away anytime soon. Kelsey, thank you as always for joining us.
Thank you very much.
That was Kelsey Keane, Director of Equity Capital Markets at the National Bank of Canada.